friends, this is A.K. Asnani from Smart VRC Bhopal. Today, I am going to share with you a technique which is equivalent to many pearls of wisdom in stock market. Let's begin. You all must be knowing that every business cycle moves something like this. The shape of the business cycle resembles that of a sine wave. Of course, it is not as smooth as shown here. There are many ups and downs. This is a normal, this is a top position, this is a bottom position, this is again normal, and this is again normal. As you all know, stock market is known to be the barometer of the economy. Stock market also follows almost similar trajectory. And the most threatening part for the investors is when some sort of scam breaks here and stocks start falling significantly and very sharply. We can call it as a crash, but this happens once in 4 to 5 years because the duration of this business cycle is about 5 years. So in stock markets also, on an average, every 5 years, we see a crash. Crash means this part. This is very, very steep. Investor who has seen 52-week high or maybe many years high stock price here is not ready, is not willing to sell his stock at 20% or 30% decline. But a stage comes when he loses patience and starts selling somewhere about here. And in the process, he incurs heavy losses. So much is the perilous this journey that hardly 20 or 25% of investors are left in the market at the bottom. Yes. And these are the investors. Among these investors, about 50% are long-term investors and the remaining are here just by chance, or I can say just because of their daring. They are still here. Now, as I said, this happens every 5 years. So, in an investment journey of 40 years, yes, most of the investors normally start at 25 years and they keep investing up to 65 years. So, in an investment journey of 40 years, they will face about 8 business cycles, or rather I should say 8 threats, 8 crashes. 40 divided by 5, these are 8. Right? Now, there are 8 threats. For me, these are 8 opportunities. I will show you how to gain from this crash. To be on conservative side, I assume that investors sell part of their holding during this crash and in the process they make 20% loss to their portfolio. Now, in the Indian context, S&P BSE sensitive index has returned 15% CAGR returns since inception. An investor who invests 1 lakh in 40 years with 15% CAGR returns, this becomes 268 lakhs. Yes, this is a pretty big amount. But this comes when investors does not do anything, when he is not threatened by this crash, He's able to hold on to his emotions. He's not doing anything. And still 1 lakh will turn to 268 lakhs in 40 years. What about the investor who loses on an average 20% gains to his portfolio every 5 years? 1 lakh will grow to only 58 lakhs. Yes, 1 lakh will grow to only 58 lakhs, and that gives returns of about 11% CAGR. Instead of remaining invested, this gentleman is not able to hold his emotions and sells on every crash and loses 20% of his portfolio, to be on very conservative side, right? And still he is able to make only 58 lakhs. What happens to an investor who sees this as an opportunity and buys more of his existing stocks so as to reduce the average acquisition cost of his stocks? Here also we take the percentage as same as 20%. So this investor who sees this decline as an opportunity gains 20% in every business cycle of 5 years. Now this investor will make returns of 966 lakhs. Investor who loses 20% with every cycle makes 1 lakh to 58 lakh. Investor who adds more stocks makes his money grow from 1 lakh to 966 lakhs. This amounts to 16.65 times of this investor. Compared to this investor, he made 966 lakhs. That means 16.65 times more during an investment journey. Okay, these are the normal investors like me. There is an investor with the name of Mr. Warren Buffett. I hope you all know. He was born in the year 1930 and his first investment was made at the age of 11. So we have seen here, for a normal investor, he gets 8 opportunities, or what I call 8 pearls. Each pearl gives him 20% returns. And if you compound it, then it multiplies your money many times at the end, as we are able to see here. Right? Now we have got 8 opportunities. Warren Buffett has already got 16. So what will happen if we also invest? We means a general investor who loses 20% every time. His investment will become 3,375 lakhs. Yes. Despite losing 20%, his 1 lakh will turn to 3,375 lakhs. Now what about an investor who makes 20% returns with every business cycle? Yes, you read it correctly. 9,33,258 lakhs. That amounts to 277 times. 277 times of this investor. That is a kind of a magic, with only action to be taken once in 5 years, and that too is very easy to locate, because those are the times when stock markets decline by 40 to 50%, and you can make so much of money. I am going to use at least 8 pearls. Out of 8, I have already made use of 5. If I continue to invest up to 65 years, then I have got 3 more. What about you? Best of luck.